One of the biggest topics of our financial world today is, when will gas prices go down? In order to understand the answer to this question fully, we need to look at what has caused gas prices to skyrocket over the past several months. No doubt gas is a limited commodity and the whole world relies on it. But soaring gas prices are really intimidating, and there is a consistent roller coaster ride in it since 2020. According to AAA, American Automobile Association, the average gas price is sitting at $5.009 as of Thursday, June 16. The report from JP Morgan even predicted that the prices will even surpass $6.20 per gallon by August 2022 because we are heading into summer, and it will also affect gas prices. Well, in this video we will be discussing the hike in gas prices, and we will go over some causes and see when these prices are going to decrease in the future. First, let's have a look at what is going on in the world that is causing gas prices to rise. Well, one of the major reasons is the Russian invasion of Ukraine and subsequent political sanctions, which are primarily stemming from the United States and European Union members, considering that Russia is the biggest exporter of oil for most of the countries around the world. According to the report from Reuters, the U.S. has imported over 20 million barrels of crude oil and other gas products on a monthly basis in 2021. This is about 8% of the entire imports on average. In addition, the type of oil coming from the Russian markets is essential for refineries in the United States, because that oil is a heavier sour crude that is required for optimal gas production and output stateside, according to the experts in the gas industry. Another significant factor that is behind the hike in gas prices is inflation, as it plays a key role in it because consumer goods are becoming more and more expensive over time, and inflation increases up to 7% each year in total. In fact, the percentage is substantially higher than last year's averages. Recently, the values on Wall Street have faced the biggest decline in more than a year. The reason for that is that the market is reacting to inflation and high prices. Moreover, it is also expected that inflation may influence other consumer-facing commodities, including gas prices, in the coming months. The traders of commodities like gasoline and other commodities like wheat and gold also cause high gas prices. Commodities traders purchase oil and gasoline in the markets based on commodities futures. After that, the markets let companies purchase contracts of gasoline for future delivery at an agreed price. However, many traders do not go for taking the ownership, rather, they go for selling the contract to make a profit. Well, the gas prices are directly affected by the ups and downs in these contracts. Thus, the traders of commodities make profits, which leads them to an asset bubble. And unfortunately, you have to pay for this bubble at the gas pump. Along with these factors, experts also indicated that the demand is also increasing as the restrictions for COVID-19 are loosened across the country. New cases are consistently declining, and that's why more and more people are trying to hit the road and get back to travel routines. The AAA officials also point out in their new external review that the amount of interest and demand for gas that Americans have shown in the starting months of 2022 reveals that the overall supply is down. That's why it is also considered as the reason that prices were creeping upward even before the Russia and Ukraine war. Now, if we talk about how this continuous increase is affecting the population. Well, as discussed, inflation is playing a major role in the rise in gas prices, and it is a trend that is not just restricted to gas prices. Because whenever the prices are affected due to inflation, the price across the board increases, whether it's the cars or groceries. High gas prices are affecting all American drivers. However, an average American bears the brunt of it. This is because the working class funnels a big portion of their income to transportation costs and other basic necessities if we compare it to the wealthier households in America. According to research, an average American spent 3.3% of the total budget, which is around $2,100 on motor oil, gasoline, and other fuels. That's why people are feeling the impact of an increase in prices at the pumps immediately. However, high gas prices are a headwind for the wider economy as well. But the rising cost of gas implies anything that is transported on a train, ship, or truck will get affected. Let's have a quick look at the history of gas prices from time to time. Different situations, from engineering mishaps to conflicts on the world stage, have badly affected the gas prices. The 2011 unrest in Libya and Egypt caused the price to go up around $127 per barrel. Similarly, in 2012, the concerns about the potential military action against Iran by either the United States or Israel resulted in a hike in gas prices. This is the time when some of the U.S. oil refineries were closing, and prices jumped to $3.91 per gallon. After that, the gas prices also increased because Hurricane Harvey hit Texas in 2017 and it wiped out 5% of the nation's oil and gas production. The prices increased from $2.37 to $2.68 per gallon in just a few weeks. And then, due to the pandemic, governments started shutting down travel and businesses. By April 2020, most of the world's population was restricted to staying at home. The demand for oil fell by 5,600 barrels per day in the first quarter. Due to this drop in demand, Russia announced to increase the production of oil in order to offset the falling prices. And with that, OPEC also came into action and the storage facilities filled up and the prices plummeted. But on April 12, 2020, Russia and OPEC agreed to decrease the production to support prices. But at that time, the price for a barrel had fallen below zero to -$37 as they were not able to store it. 2021 was the vaccine year, and the restrictions were lifted, and demand increased. Although the production remained depressed for some time, in May 2021, the gas prices surpassed $3 per gallon. In the second half of 2021, inflation increased at the highest level because of supply chain restrictions such as labor shortages. The gas prices closed out at $3.28 per gallon. Most of the states within the U.S. have faced a rapid upward swing in the last couple of months. In fact, people are paying more around the country, and according to AAA, no state's average is lower than $4.28. The states of the West, Midwest, and Northeast are experiencing some of the highest gas prices in the nation. These 5 states have the highest current average gas prices: California $6.34, Nevada $5.49, Hawaii $5.47, Oregon $5.41, and Washington $5.40 per barrel. As we are entering the summer season, more and more states are hitting the $5 threshold, which includes Michigan, Pennsylvania, and Massachusetts. Knowing or predicting the correct trajectory for gas prices is not completely possible, as experts believe that we are not going to see the end of rising gas prices soon. And most of the major global energy companies have suspended their operations in Russia, and the sanctions were also restricting the whole supply. The gas prices will stay inflated as long as Russia continues to fight in Ukraine. The experts also said that it is a critical situation that is not going to improve in days or weeks. Rather, it is going to take months. AAA reports also stated that the prices will continue to rise. Sorry for the bad news, but this implies that we are not going to see a drop and are not very much likely to take a breather soon. However, there is a chance of a price drop at the end of this year, but it relies on several factors that are pretty volatile for experts to consider. The prices could go down during autumn if the seasonal patterns hold up, because there will be less demand for gas during fall. And inflation could also get started easing later, as most of the experts have forecasted that the inflation rate will dip to 5.5 by September. But keep in mind, the prices are going to stay high. You might be able to get some relief if the prices remain below $100 per barrel. Thank you for watching the video about gas prices today and where they are potentially heading in the future. Please comment below what you think the future holds and what topic we should dive into next on Our Financial World.